And everybody, it's Tim Reazor, the Chief Investor Strategist here at Revere Asset Management, just after 3:30 on a Tuesday night. So very quickly, stock nerds, market lovers, I need to share something with you. So if you go to Daily Market Insight, there's two videos I want you to watch. The first one here is the live trading podcast that we do, the video podcast we do every week. In here, we talk about a process to which Don and I employ every day that we scan for stocks. The stocks that have the propensity to double, triple, even quadruple in price. And there's actually kind of a formula to that we discuss with institutional support and market cap size. And so if you haven't seen this, please, 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 it's right at the beginning. You can, if you're like, Tim, I don't want to invest an hour of my time in this. Well, listen, I think it's going to be quite fruitful for you. And so it's towards the beginning of the show. Centers around, I think it's not, did Boeing trip the thought process for that? Either way, but it's around that discussion. And I'm telling you, it's awesome. Like the really good feedback for people that have heard it. And it just happened naturally. We didn't plan on doing that as a topic. It just came up organically. And then this 21 over 21 list that Don does pretty much every other week. And he'll actually be doing it again this week for you on this Friday. It's become a watch list, kind of like a watch list Bible for stock nerds and market lovers across the globe. And if you haven't seen this week's list, please get it from that video. If you haven't seen the strategy, we talk about the institutional support, market cap size, and doubling, please watch that video. And then stock nerds and market lovers, these videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. If you need advice, if you want advice, if you like the strategies to which we espouse in these videos, all you have to do, you can email any one of us right here. We all work under the same roof. And even though this man right here owns the firm and we work for him, we all ultimately work for you. And so if you have any questions, don't ever hesitate to ask. Whether you're considering becoming a client, your client, you have no intention of ever becoming a client. We just want to empower individual investors. That's been our mantra since we opened the doors to the shop years ago. And so 855-732-5932 is all you have to do to get a hold of us. You can email any one of us, and please keep those questions coming. I'm telling you, we're helping a ton of people in terms of they've gotten hoodwinked on life insurance, or we don't do life insurance. We don't do annuities. We don't sell products. What you see on these videos is what we do. But if you've gotten hoodwinked or you don't quite understand why someone's telling you life insurance is an investment or an annuity is an investment, they're not investments and they're not to be purported that way. And so listen, we can help, or Danny can help. But really, more importantly, it's Danny that can help. But you got to call 855-732-5932. And so with that, these videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. If you want advice, if you need advice, if you seek advice, please, 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 just in fact, give us a call. So listen, I took a loss. I sold something that just was not performing, and I've got a portfolio full of performance, and I've got this one stock here that really wasn't just cutting the mustard for me strategy wise, and it was Massey. So I held Massey into earnings, had a really small gain going into this, but it fit the criteria that I could hold it. And then you can see 1, 2, 3, 4, 5 days after earnings, this is a bear flag forming right here. There's no reason to keep this. So I sold this yesterday when it couldn't cross that 5 EMA. And I'm like, let me switch that out. So I ended up taking what did I do? I took a 3.15% loss. And so I like to talk about the losses and selling right away at the top of these videos, because if you don't watch to the end of the video, I don't want to bury it. I think to be successful in this industry, you need to have the courage of your convictions to execute your sell plan, to execute your strategy. And so many that Don and Danny and I meet, you're going to say the words, I'm going to wait for it to come back. I don't want to take the loss right now. I'm a long-term investor. And look, it's a 3.15% loss. It doesn't make a dent in what I'm doing. And that's the whole point. You don't want these to make a dent. I want my winners to run and not my losers. And so capping this at 3.15% to the red is absolutely a gift. And who knows, Massey could go take out 258, the old high here. Maybe it doesn't, but this isn't the reaction I was looking for. And so I am getting the hell out. And look, I'm pretty cutthroat with this, and maybe some of you would have sold sooner, but I don't want to hold laggard. And so I replaced Massey. As soon as I hit the trigger on Massey with Danny, I bought Zoom. And so here is, I bought Zoom coming through yesterday's moving average, kept right through the 5, right through the 8. And I got, what did I get at that at? 258, 258.59 is, I believe, what, 258.60, something like that. 258.59 is where I think I picked up Zoomy Zoom Zoom. Now we'll see how Zoom performs, but I'm looking for Zoom to make after consolidating here for a couple of weeks, looking for it to come up and take out 281 as it makes a run in the earnings. I like Zoomy Zoom Zoom here. And then I also bought something I was watching before, AUDC. Sorry, I cannot talk today. So audio codecs. And so let me show you this. You know I'm a big proponent of buying leaders on the pullback. Audio codecs I like. This is a weird pattern. I'm not a fan of this type of pattern, and rarely will I ever endeavor into it, but strong pullback, hold it to 50, retakes the 21, now two closed above the 21. And I got this yesterday morning or late morning. And so now I'm looking for this to kind of, let's see if it wants to, it's probably going to challenge halfway back, do a halfway retrace. And then that's where the rubber really meets the road. So I'm in audio codecs at like 36.61, makes sense, 36, maybe 62, something like that. And so we'll see how that wants to do moving forward. And you can see here, like if I took this to an ATR chart, yeah, where to come back to, you don't buy it at the third ATR, buy it at the low risk entry point, which is what, the mean. And so that's what I did there. So those are the three things I've done so far this week. And look, don't be thinking that this market is extended. Now look, you got a jobs report this week, and you're going to have a day where the market pulls back, and maybe today was that day. I'm not being facetious when I say this. Here's a 5-minute chart, and you had a liquidity break around 1330, like 1320 into 1330, and then it started to recover. So was that small liquidity break all you're going to get? And so look, the knowns are known. Like the country just about had to shut down again in July. Jobs report probably bird, but you know the market's a forward-looking vehicle, and so right now it'll be really interesting to see what transpires in the next couple of days. Do we get a pullback tomorrow or Thursday? I don't know. But you normally grind into the jobs report, and the jobs report is the uncertainty. But we shall see. But right now, what you're seeing in the charts here is bullishness, and what you're seeing is a market that is not extended. You're like, well, Tim, it's close to highs, but not there. The index I want you to focus on is the NASDAQ. Tim, the NASDAQ, it's at highs. It can't go higher. Stop it with that nonsense. Stocks and indices making new highs tend to go higher, my friends. Microsoft has made like 1 million new highs. Okay, that's a little facetiousness, but don't be afraid of buying stocks at or near their all-time highs. You don't have to buy them extended. Just because they're at a high doesn't mean they have to pull down. And buying things at new highs and not extended are not mutually exclusive. And so when I'm looking at the average true range chart, well, it's only 1 ATR off the mean. This thing go 2, 3 ATRs higher. That third ATR is up here at 11,554, 555. So yeah, that's like 400 more points. And so I think it can get that. It doesn't have to get that. Could it pull back to the mean? Yeah, it's a market. Anything can happen, but there are so many. I tell you, we covered this in this video podcast, and it was Don's insight into this, talking about the AAII study and the counterintuitivity of it. You got to listen to it if you want to understand what's going on with the inverse indication that's happening with the AAI investor, which is the average investor in America, the average individual investor in America. You need to it's not covered in that video. It's covered here in live video trading. I'm telling you, it'll clear up a whole bunch of things, and it might give you the ability to step into something if you've been afraid. And so many of you are afraid, and we know that because you write to us, you talk to us, you call us, and thank you for doing that, by the way. But what you need is a plan, man. You need a plan. And this is look at this chart of the Dow. Get to the chopper. It's the Dow. Like, does the Dow want to break out like from here? Or it's going to break out. It's the Dow. It's going to break out from the Dow, Jim. Effing Apple, effing Disney. What is Disney doing after hours? Disney is up a couple points, and you're like, well, it's a bad parks number. Yeah, no kidding. It's effing COVID. And so that's known, right? It's known that the parks are not going to do a good number. And that's my point about the jobs report too. So I mean, could the market tank on the jobs report? Absolutely. Could the Dow tank on Disney? Disney was thought to have a bad parks number. I mean, how many people shorted Disney thinking that they were going to say? I mean, you get the point I'm making through hyperbole. This is a really good chart of the Dow. I mean, well, and it's not a good chart of the Dow because we're along a double in the Dow. It's just a good chart of the Dow, and you want to be participating in things like this. And like when you're looking at RTY, that's a good chart of the RTY. It's been a little slower. We own some RWM. No, that's not what we own. That's the short. What do we own? We own the double long Dow, which literally just escaped my mind. I mean, the double long small caps as well. And so RMW, gosh, that's going to bother me now that I don't know that. And I literally just had it on my brain. I should have written it down. I'm doing all this from memory. And so RTY here is a super duper awesome looking chart right here. Where do I think RTY goes? I think RTY goes to challenge the 786 level up here at 1551. And look, if you go up and challenge this zone up here, you're going to feel that bullishly in a whole bunch of stocks. And the small caps reverberate. And so and then you start coming up. If you clear that little level, you clear this here, you're going to come up and challenge this zone up here, which is around 1600. And that, my friends, is probably where the rubber meets the road. You'll probably see the S&Ps up near February highs at that point, or trying to challenge them. And it's going to, there's a bunch of people that aren't participating, and it's going to incite some panic buying and maybe some even panic covering. And so there's another thing I want to alert you to just real quick here that's happening with the bonds. I'm really bullish bonds here. So here's the ZB, the 30-year treasuries. And you're like, what's so special about that chart? Well, it's ZB and like TLT. A lot of this is slow moving for you, but this is a big deal, my friends. This is the TNX. This is the yield on the 10-year treasury. This is going to matter at some point. If they don't pass, now look, if the shock would be if there is no agreement on stimulus, it's going to be dead in the water, and the people that need help aren't going to get help in this country. That's going to be the big deal. Whether you're for or against it, that's not my discussion with you. My discussion with you is it's expected that something sometime is going to get done. The shock would be to the markets that nothing gets done, and this here then would come down and probably challenge the lows. And look, as I'm about to tell you that this is tied to the bullishness of the housing trade, that housing trade is going to fall apart because people won't be able to pay their bills. And it doesn't matter how low interest rates are. If you don't have a job and there's no extra stimulus coming in, meaning one-time checks plus recurring, whether it's $600 or $200 checks, that housing trade is going to likely fall apart. And so here's that's not a starting restaurant, it's DHI. Here's DR Horton, super duper low. We're participating in this, been since the beginning of end of June, beginning of July. MTH, you can see that's still working, even though it pulled back to the 5 today. You'll see these things start to fall apart. And I don't know if the housing trade falls apart ahead of, the market always kind of foresees what's happening. And so you just want to pay attention. I think the lead, I mean, there's a number of leaders, LGIH, how did that do today? Yeah, I mean, look at that on earnings the other day. Look, there's a number of leaders in this area, and if they start to break down ahead of, say, the market's breaking down, it might be a heads up that the stimulus isn't coming, and that's something you pay attention to. It doesn't mean you run out and sell. I'm not telling you to do any of that nonsense. I'm just telling you to pay attention to this, because this, remember when interest rates were so low, it spooked the market. Now interest rates are really freaking low, and it's not spooking the market. And so, well, Tim, what's changed? Has anything changed? Not yet. Why it spooked the market before was because there was no stimulus. There was no plan in place to keep people in their homes. There was no laws against eviction. There was no law. There was no money coming in to help you pay the mortgage. Now, what could change and turn this back to a really big, scary honking deal is if there is no payment protection. And so I think you want to just keep an eye on that. And it might be something along with the VIX futures and all the other things that we typically look at, give you a little heads up that maybe the markets are due for a breather. But right now I'm not seeing that, but I wanted to show it to you just in case it pops its head up. Okay, with that, hope you have a great night, and I will see you at the next update.